Right now, I want to go over the VA home loan program, answer some really important questions, and give you a high-level overview of the VA home loan, what you can, what you can't do with it, and answer some very common questions along the way. My name is Drew Smith. I'm a licensed loan officer, and I specialize in VA loans. So I have updated this to meet 2024 guidelines and anything that's changed in the VA handbook. So first I want to talk about credit score. This is a really common question, and there's lots of competing information out there. What credit score is required for a VA home loan? So it really depends on what lender you go to. Some lenders are going to say we need at least a 620. Other lenders are going to say there is no minimum credit score requirement. So the truth is, per the VA handbook, there is no minimum credit score requirement, but lenders at their own discretion can add what's called an overlay, and they can require a minimum credit score. So there's two different ways that you can underwrite a loan. You can manually underwrite it, or you can run it through AUS, which is Automated Underwriting System, and it has to meet the VA handbook guidelines. Typically, we're looking for what's called an Approve Eligible rating, and in order to get that rating, you're going to most likely have to have at least a 620 credit score. So really what it boils down to is different lenders and how they want to do business, but technically, there is no minimum credit score requirement. And we at Military Home Spot Lending, we don't have a minimum credit score requirement, so we can do those manual underwrites. But just kind of think about that. There's two different ways that lenders are going to do their loans. AUS approval is going to require 620, manual underwrite, no minimum credit score requirement. Now let's move on to qualifications. We're looking at income and work history. So you're going to need at least 2 years of work history. Typically, we're going to want that to be in the same or related field. And then you're going to want to have 2 years of rental history, on-time payments, good rental history. And then you also have to have your COE. So this is your certificate of eligibility. It's a piece of paper basically that you get from the military that says you are eligible and entitled to get a VA home loan. Now we're looking at borrowers, really who can be on the loan. There's a few different ways that we can structure this. So it is going to be limited to the veteran and active duty service member that actually has that COE. So if you don't have a COE, you cannot get a VA home loan. A common question that I get are from children or spouses of somebody who served, thinking or asking if they can use their significant others or their grandparents or somebody else's COE. There are limited or very small circumstances where that is possible, but typically it's going to be from a service member that has died in the line of duty, and their significant other can then use their VA benefit. In most cases, it can only be the veteran and the active duty service member. Now you can structure it with 2 service members or 2 veterans. You can mix and match any kind of way as far as kind of how you want to structure it. But if you've got 2 people that have a COE, they can buy a house together. They do not have to be married, and it really could be more than that. But as long as you have a group of people that all have their COE, they can be all on a loan together, and they would split entitlement. And then the kind of last way that you look at it is the veteran or active duty service member and their legally married spouse. So they do have to be legally married, and then you can all be on the loan together. Now, it really kind of depends on the state that you're in. If you're in a community property state, regardless of if you want to or not, we are going to have to account for your spouse's liabilities. They don't technically have to be on the loan, but we do have to look at their credit and add in those liabilities. So if you're thinking about how to structure a loan, it kind of comes down to the state that you're in and whether it's a community property state or not. There's different nuances when it comes to that. The next we're looking at is home type. What types of homes are eligible? So you can do a 1 to 4 unit. You can do a manufactured home. It does have to be at least a double wide. Condos and townhomes, and then it must be your primary residence. So you can't just buy an investment property and plan on having somebody else live there and move in and rent it out from the get-go. There are ways that you can do that eventually, but when you're purchasing a home using your COE, they're asking, hey, are you going to be living here? And in a lot of cases, they're asking if your plans are to live there for at least the next 12 months. So it does have to be your primary residence. Now, once you meet that requirement, you move into the home. There's a couple different things that you can do to turn that into investment property, and we'll talk about that a little bit later. Now we're looking at loan limit. How much can you borrow? How much money can you actually get when you're purchasing a VA loan? The important nuance to this is entitlement. So that COE that I talked about, it's a sheet of paper and it's going to show any entitlement that you have used for your VA home loan benefit. You've got two different types. You've got Tier 1 entitlement and you've got Tier 2 entitlement. It's a simple difference. Tier 1 entitlement means that you don't have any entitlement used. Tier 2 entitlement means that you do have some entitlement used. You can use that entitlement one of two ways, or a couple different ways that I know of. There are, one way, and the most common way, is that you've bought a house. You own a house currently, and so some of your entitlement is used. The second way is that there was unfortunately, probably a bad experience, and there is some entitlement against it because there was a foreclosure or a deed in lieu, and some of your entitlement has been lost because of that default on a previous VA loan that you had, and it's going to show right there on your COE. So for your loan limit, if you have Tier 1 entitlement, so no entitlement used, there is no loan limit. Doesn't matter what county you're in the U.S., there is no loan limit. You can do what's called a high balance VA home loan. You can borrow as much as you want, as long as you can qualify for the loan. You have to meet the other requirements of the loan for debt-to-income ratio and reserves. But as long as you can afford the payment based on the other guidelines, you can borrow as much money as you want. There is no loan limit. If you have Tier 2, there could be a down payment required, and you're going to be capped. And there's a calculation that we do as far as how we come up with the number, what you can still borrow if you have Tier 2 entitlement, and you could be on the hook still for a down payment. So now let's talk about a homestead exemption. This is a great benefit, and it's really any loan you can do this on, but you have to be a veteran or an active duty service member. It kind of depends on the county and the state that we're looking at. So it does vary where you're going to be and where you're going to be living. But this is where you're going to be exempt from property taxes. So every county is different. Texas, just from my personal experience, has some of the best benefits when it comes to this, where they actually waive all of the property taxes if you're 100% permanently disabled through the VA, or permanent in total, I think is the language or the verbiage there. Now again, it does vary state to state, even county to county, but that's something to look at. If you are service connected with a disability rating, that might be something to look into. If you're not specifically set or in love with any certain part of the state or the country to live in, you might shop around and look around, and that might be something to help you decide, because you could be waived from property taxes, which could significantly lower your payment for what you would be looking at qualifying for a home. So that's good to know. Another cost or another thing associated with the VA home loan is the funding fee. So all loan programs have a cost associated with it. Conventional, FHA, VA, USDA, conventional and FHA, they're going to have these private mortgage insurance fees that are attached to your payment. So you're basically paying for coverage for the lender. It's not to protect you, it's to protect the lender in case you default on the home. It's mortgage insurance. Now the VA doesn't have mortgage insurance, but they have this funding fee. It's a percentage of the loan amount, and there's a couple different ways that you're going to look at adding it to the loan. So first, it is a fee from the VA. It's not a lender fee. So if you get a VA loan, it doesn't matter where you're going. The funding fee could apply to your loan. On your first time purchase and your subsequent purchase, the cost is going to vary. So at the time of this recording, on your first time purchase, it's going to be 2.15% of the purchase. So you take the total loan amount that you're going to be borrowing, you multiply that by 2.15%, and that number will be added to the loan amount. Now you can pay it as closing costs if you want to, or you can finance it and it can be added to the loan amount. Now on your subsequent purchase, that goes up. So it goes from 2.15% to 3.3%, but it does reduce if you're putting money down. So if you're putting 5% down or 10% down, that funding fee will reduce. I did do a full video on the funding fee. I will put that in the description of this video if you want to know more about the funding fee. Now you can be waived from this. Again, if you are service connected, if you have a disability rating, again, I think the language is if you have a disability rating or you're service connected at all, you will be waived from the funding fee. I put the link to the website here where you can find that. It's va.gov, and you can find the information about the funding fee and if you might be waived from it. The easiest way or quickest way to see if you're waived is just to pull up your COE. On your COE in the top right-hand corner, it will say exempt or non-exempt. Exempt means that you are waived from the funding fee. Typically, if you're receiving any type of money from the VA as disability income, you're going to be waived from the funding fee, so you wouldn't have to pay that. The next thing we want to look at is the appraisal. So I talked to a lot of real estate agents and other borrowers and just people in general, and the appraisal for a VA home loan is sometimes intimidating or misunderstood, and sometimes I've even seen on home listings where they're saying there is no VA home loan, we're not even going to look at it because we know it's not going to pass the appraisal standard. The appraisal for a VA home loan is really in the interest of the borrower. Because, like I've already mentioned, when you're getting a VA loan, it has to be your primary residence. So the VA knows that either a veteran or a service duty member is going to be, or an active duty service member is going to be living in this home. So they want to make sure that the house is at least to a minimum standard. And that standard is safe, sound, and sanitary, and that's how it's worded within the VA handbook. So it really just needs to meet a certain livability standard. It can't just be falling apart. So it has to have wall and floor coverings. There's a few things that we're going to see almost immediately if we're looking at homes and know, hey, that's not going to pass VA standard. And it's really comes to these safety issues. So wall and floor coverings. It can't have exposed subfloor. It can't have 2x4s and wires hanging out of the wall. Everything has to be covered. Now, it doesn't have to be updated. It doesn't have to look the nicest. It can be a little bit, in rough shape. It can be old. It can be dated, but it has to be safe and sound. And there's different safety standards. It has to have hand railings. If there's a door that goes out the backyard, it has to have a deck. Yes, I have seen homes that have a missing deck. So if you open up the door, you would just fall down into space. There's no deck there. So there has to be a deck. The roof, there's different standards on the roof. Typically, we're going to want at least a 5-year certification on the roof. If there's any questions about it, kind of just depends on the area. If they're not going to the appraiser's not going to get up on the roof and actually start digging around and looking. But if it's obvious in disrepair, that might be an issue. If gutters are falling off, they're also looking at paint. If the paint is chipped or peeling, that could be an issue. The paint needs to be in good shape because that's all condition and livability issues. If paint's not on the side of a house, there could be some serious issues if that siding is getting wet and it could get ruined. So again, we're really just looking at, is it livable? Is it in good condition? And it can't really be falling apart. So if you're thinking about using your VA home loan to get a fixer-upper, that's probably going to be tough. Now, there are VA renovation products out there where you can look at getting some money in an escrow account to pay some contractors at the time of purchase. So if you are looking, that might be a product to look into. That's a VA renovation loan. So really, that's kind of the high-level stuff, but I've still got some final thoughts here, some common questions, and other information that really didn't fit in those other categories. So first, it can be used as many times as you want, as often or as comfortable and as much energy as you have to buy and sell homes. You can use the VA home loan as much as you want. There is no limit to it. Just remember on that funding fee, your first time purchase, it's 2.15%. Any subsequent use, any use after your first time purchase, it's bumped up to 3.3%. There are rules as far as how long you have to live in the house, or it's got to be your primary residence, right? So it's kind of limited to how often you want to buy a house and move into a house, so as many times as you want to move. So that's something important to note there. The little thing that you can do with that, so people, I don't know if everybody, but I've seen a lot of information out there that, hey, you can use your VA loan to buy investment products or properties and build your investment portfolio. So if you're wanting to do that, you can refinance your VA loan with a conventional product or a different product. So that would restore your entitlement, and then you can go buy a new house with it. Because that's something that you might run into. If you're looking at building your investment portfolio with your VA home loan, you might run into entitlement issues. So ultimately, there is going to be a cap on how many homes you can own with your VA loan without refinancing or selling those homes. So VA loans can be refinanced with another product. There's typically a waiting period, at least 12 months or around 12 months. It kind of just depends. But think about that. You may need to wait at least 12 months before you can refinance out of that VA loan. In that case, it would restore your entitlement, and then you can go buy another property with your VA loan. A cool thing about the VA home loan is that the underwriting guidelines are very flexible compared to some other products. We've got some other subtle nuances like the appraisal and things like that. But as far as the guidelines, you can go higher on your debt to income ratio. You can get away with late payments that were a little bit ago. You know, they can't be recent late payments, but there's just more flexible underwriting guidelines. So you can have lower credit, higher debt to income ratio. So it's a lot more flexible in those regards. You can do 100% financing. So you don't have to put a down payment. Other products, conventional FHA, anywhere between 3% and sometimes up to 10% down payment. VA home loan, no down payment. Now, a common misconception with that is that there's no money required out of pocket. So you've got two different costs. You've got the down payment, then you've also got closing costs and lender fees like processing and underwriting. That's all wrapped up in closing costs. So it doesn't mean that there's no cost, but it's reduced because you don't have to come up with that down payment. So that's a common misconception there. So yeah, that's really the big overview of a VA home loan. It's a great product. If you got specific questions, please reach out to me. And if you want to know more about the VA home loan and using it for a new construction, we have a cool product called the one-time close new construction. So it's a VA one-time close new construction. And I've got a link to that video. I suggest that you check that one out next.